Hello, hello, hello. Happy Saturday. Happy Saturday, y'all. So I'm here. I wish I would have been able to make it yesterday, but I'm feeling better, not 100%, but definitely way better than I was Thursday and of course on Friday. So thank you all for being patient with me for sure. Most definitely. I really appreciate it to everyone who constantly send messages, calls, and all that stuff and everything. We're all good for the most part right now. So, you know, when the kids go back to school, all my parents, y'all already know what it is. When the kids go back to school, it's always something. You as a parent are gonna get something, a cold, stomach flu, virus, something. It just happens. So anyway, but we're here. I'm ready to get into part two. Part two, for those of you on Instagram, I'm gonna close this out because I want to be able to focus on IG. So jump on Instagram. Instagram, I need y'all to jump on YouTube, and in that way I can focus on one. Thank you for everyone that's tuning in on Facebook as well. Let me close this out on Instagram. Y'all jump on YouTube or Facebook, okay? We're gonna get into part two. Part two. We've been talking about trading trauma. So if any of you have ever traded before, you know someone that has been trading, haven't really seen much success and whatnot, and they've pretty much struggled, then I would definitely say, do me a favor, share this video with them, share this live stream with them. If you're watching the replay, share this replay with them because it is definitely going to help them as much as it has helped me. And a lot of the stuff that I'm sharing with you all is things that I have done in the past and or currently do today to help me with getting over the past trading trauma that I experienced, but also to keep me on track, to keep me focused. So that way I'm not pushing back into, what I was doing before. So before we get into this whole trading trauma series, I definitely want to say thank you for sharing your Saturday with me. I really appreciate it, y'all. If you're wondering, like, who are you, Leona? Why are you talking about trading trauma? Like, why in the world is this coming from you and you're new? First of all, thank you so very much for jumping on. But I've been trading for the past 5.5 years, going on 6 years in December. I initially was introduced to cryptocurrency trading, but then I was introduced to forex trading after that because crypto wasn't really like a balance for me. I was still active duty at the time, and when I got introduced to crypto, it was just more like, hey, you can make money with this, and you just set up this account, and then you just trade. But there was no education, there was no foundation, no skills being taught to me. It was just figure it out on your own. So needless to say, I was like, I did it for a little bit, but then I was like, yeah, whatever. But when I was introduced to forex trading, there was more of a balance. I wouldn't say balance. There was more of a foundation that was attempted to be built. There was education that was being taught. The time it just wasn't right for me when I was introduced to it in 2018. So I did it off and on from 2018 to 2020. But in 2020 is when I actually said, okay, I'm about to retire from the Army at this time. I had dropped my retirement packet, and I was like, yo, like, I don't want to work a job. I want to do this full time because I personally saw, because I've made money, and of course I lost money in the beginning of my trading journey. I could tell y'all some stories, but I ain't gonna go there because I don't want to scare anybody. We're talking about trading trauma, so I want y'all to get over the trading trauma. I don't want to, add any traumatic experiences to you and whatnot. But I will say this: during that time, though, in between 2018 and 2020, it was just back and forth, on and off. But I was really busy with work, being a first sergeant at that time in the Army, and so I didn't have a lot of free time because my days, honestly, this is what it looked like. And if anybody can relate, let me know, right? But at that time, I was getting up at like probably 4 o'clock in the morning, getting on post. I would do my workout before it was time for us to do PT together, physical training together, because during physical training, there were times where I ended up having to do meetings. I had to, go and check on people at pregnancy PT. It was just always something. So at that time, I was really, really busy. I didn't get home a lot of times until 6, 7 o'clock at night, and then you talking about 6, 7 o'clock at night, and then I'm up at 4 o'clock in the morning. So it wasn't a lot of family time and everything. So that's why with me at that time period, trading just wasn't a focal point for me. It was like, it's cool, I could see me really doing it, but I wasn't able to really give it all of my attention like I wanted to until 2020 when I had Laura, right? Laura was born. I dropped my retirement packet. And then I was like, hey, look, if I'm going to do this full time, it's time for me to get to it. Like, I'm going to just lock in. And that's what I did. But during that time, even in 2020, going through everything all over again, just kind of attempted to erase what I learned before and just starting from scratch, there still was a bit of trading trauma, right? And so this is why I want to talk about this, because going through this 5.5 year journey, there's a lot of things that I learned. There are a lot of things that I have learned not to do, but also a lot of things that I have learned to do. So today what we're going to cover is rebuilding your confidence and trust in your trading system. So however you've been taught to trade on YouTube, Facebook, Instagram and whatnot. Oh, my bad. I think I cut y'all. Okay, yeah. I'm like, did I cut it off? It was still up. But yeah, so I just want to make sure that you all are aware of like, what are some of the things that you can do to start to rebuild that confidence and trust in what you've been taught? Or if you're like, hey, I just want to start from scratch. Well, let's start from scratch. Okay. So a quick reminder, y'all, before we get into recap of part 1 and then going into this rebuilding confidence, I want you to do me a favor. If you've enjoyed this series so far, if you watched part 1 and you're like, I'm ready to hear what you got for part 2, then do me a favor, y'all, like the video on Facebook. On YouTube, I need you to give it the thumbs up first, okay? Then you can heart it and comment and all that good stuff. But give it a thumbs up and then do your hearts and all that. On top of that, y'all, feel free to share this with people that are struggling. They're on the verge of giving up, to be honest. A lot of us, if you've been trading for any amount of time, if you've been trading for longer than a year, I'm pretty sure at some point in your mind, you was like, is trading really for me? We've all been there. Like, none of us are immune to that. The air just got in my throat. Excuse me. But none of us are immune to that, right? So this is why I want you to just share this with a person that you know for a fact has said that, felt that, expressed that to you, or you know for a fact they're like struggling, like they can't seem to get on the right path and they're not seeing consistent profit trading. Share this with them, whether it's for them or not, whether I'm the person to share this type of information for them or not. That's not your concern. Do your part. Share, okay? Now, I have not coughed this much in the past, I'll say, hour or two. And now all of a sudden the wind blowing and it's getting in my throat. But anyway, we're going to work through it. So y'all, please bear with me. I told you yesterday I wasn't feeling my best, but today I'm better. I'm not 100%, but y'all just please bear with me, okay? So anyway, let's get into a quick recap. So in part 1, y'all, what we talked about what trading trauma is, and of course, how it can affect your decision making as a trader. Now, these are just a few points, like the trading trauma. What does it look like? All this is just emotional scars, okay, from significant loss or tough trading experiences. So some of you may have blown, meaning lost, the money that you deposited into a live broker account. Some of you have blown multiple accounts. What that dollar amount is, I don't know. But everyone's dollar amount is different. So whether that's $200, whether that's $2,000, whether it's $20,000, $200,000, everybody's risk level, risk tolerance, and their loss capacity is different. So, what is not a big deal of a loss to me may not be the same for you. But I just need you to understand everyone experiences trading trauma at some point, okay? None of us are immune to it. We've all experienced it. It's just a matter of us figuring out what are some of those signs so that we can work through and overcoming it, okay? So some of those signs of trauma that we talked about was the hesitation to trade, right? So now, instead of you just going by what you know and what you've been taught with your trading strategy, you're like, I don't know. Let me just wait and see. there's the hesitation. Okay. There's the fear of losing again. So you're telling yourself, well, what if this doesn't turn out the way that I anticipated and whatnot? Or the overreacting to market changes. So you may be overly conservative or overly aggressive. Those are some of the signs of trauma, trading trauma, that you may have experienced. If any of you have experienced any of those, and you missed part one, if you have experienced any of those, type it in the chat, or if you're watching a replay, type it in the comments which one of those signs of trauma you feel like you've experienced, or for a fact you've experienced. Do you hesitate when it comes to putting in the trade? I don't care if it's a demo account. Do you still hesitate to put that trade in? Do you have that thought, like that fear of losing every single time you go to input a trade into the market? Or are you extremely conservative or extremely aggressive in the market, right? So you may still do a bit of revenge trading. Or, excuse me, y'all. Or you may stay at a very low lot size when we're talking about forex trading. You may stay at a very low lot size when you're inputting the trade, right? And you may not be ready to go up. So you may stay at the lowest lot size possible. So those are some signs of trauma. Drop it in the chat if you feel comfortable. Okay, drop it in the chat or in the comments for the replay people. Drop it in there. Okay, let us know which sign of trauma you have experienced. And then I gave you an example of how this plays out. And all I'm doing is just telling you, or I told you that today's markets are very volatile. And of course, social media does influence and can amplify stress and pressure for traders out here. So you can hear people having all of their opinions on what gold is going to do, what Bitcoin is going to do, what Apple is going to do if you're in the options market and whatnot, in the stock market. It doesn't matter, y'all. Everyone's going to have an opinion. But at the end of the day, the goal is to start to work through those signs of trauma that you've had, start to heal. And that's something that I shared with you all, where we gave some of the first steps to heal, which is acknowledging your emotions. Okay, start journaling your trading experiences, and then reflect on how that trauma affects your mindset. So that was actually part of your homework last week. If you tuned in to part one, that homework was to complete that journaling, which was to write down 3 past trading experiences where emotional trauma was triggered. Okay. And then you were also expected to reflect on how each situation has affected your trading mindset today and what emotions arise when recalling those moments today. Okay, what emotions today arise when you're recalling those past moments? All right, now recap is done. If you still with me, let me know. Give me a thumbs up, thumbs up, thumbs up, thumbs up. Say I'm here. If you can't get to the emojis, oh my gosh, that wind is like really getting in my throat. Okay, we're gonna work through this. I'm gonna have to probably be fast, y'all, because I don't want to do all that coughing and stuff, because I'm pretty sure it might distract some of you. So we're going to get through this fast as possible. All right. But definitely I want to make sure you get the value. So hopefully you did the homework and you're ready to get into this, because we're going to touch on how loss of trust in self or your trading system leads to poor decision making. And of course, those missed opportunities in the market. And I'm also going to drop a few practical tips on rebuilding the confidence. And of course, you're going to get your homework assignment for this week. Now, if you are ready to dive into part 2 of the trading trauma series, let me know in the comments. Let me know, like, I'm ready. Put ready in the comments if you are ready to go into this. And if you're watching a replay, do the same thing, type ready, okay? So that way, listen, I can engage with y'all that are watching a replay. I can engage with y'all, just by responding and everything to you. Sorry, y'all. I can engage with y'all in the comments as well, okay? So first thing we're going to do is dive into how loss of trust in yourself, but also your trading system, leads to poor decision making and missed opportunities. Now, here's the thing I want you to know. All right, when a trader loses trust in themselves or their trading system, it can lead to poor decision making and missed opportunities in these different ways. So there are 5 things I'm going to give you. Number 1, really thought I was going to be great today. Number one is hesitation. We talked about this as a sign of trauma, trading trauma. But hesitation comes because without confidence in your abilities or your strategy, you begin to hesitate to enter into those trades. How many of you have experienced that at some point in your trading journey, or you are there right now? Like you're even hesitant to put trades in a demo account. And for those that are watching and don't know what a demo account is, all this is a practice account. The algorithm is pretty much the same as a live broker account, but this is how you can hone your skills, get better, collect the data to let you know if you're ready to put money into a live broker account and start trading your actual money, okay? So when we're talking about hesitation, this is when you second guess yourself, okay? This causes you to miss out on profitable trades because you're unsure of the decision. Like, is it a good opportunity or not? Well, let me just wait. That's typically what happens. Oh, let me just mark it up and see what happens. And then you become the markup king or queen. You can mark it up all day. You can see it hit your areas and all that stuff all day. But then you're not making any money because you're not putting it in your account. Excuse me, y'all. So that's hesitation. Now, the second one is overthinking. All right. This is where there's a lack of trust that causes you as a trader to overanalyze every single move. And it actually ends up leading to analysis paralysis. Okay. And this simply means that you'll spend too much time worrying about potential outcomes instead of taking action, which results in missed entries. So you're not entering the trades because you're like, well, what if it does this? And what if it does that? You're doing all this what if instead of trusting your system. Because of your past trading trauma, you lack that trust. So therefore, you don't pull the trigger. That's just pretty much it. Okay. So that's number two, overthinking. Number three, and if any of these resonate with you, let me know. Okay. If you're saying, yep, I hesitate. Yep, I'm overthinking. Drop the word in the chat. Or if you're watching a replay, drop it in the comments. Okay. If you're hesitating, if you're overthinking, drop that word in the comments. All right. Number three is emotional reactions. Okay. So how many of us have experienced this? Like, okay, so when the trust is lost, emotions like fear or frustration take over. Okay. And at that point, as a trader, you're more likely to act impulsively. You're driven by panic or anxiety. And this often leads to poor decisions, such as entering a trade too early, exiting too late. Even sometimes you may enter the trade too late and still exit too late, or you may enter the trade too late and exit too early, right? Because let's say you enter late and it turns around, it's not going in your favor. So let's say you enter for a buy, and because you enter late, if you said, oh well, it hasn't gone that far, let me still enter. That thing pull back and it starts to sell a bit, and you're like, oh man. So then you say, you know what, I knew I shouldn't enter this trade. So then you exit. So then you exit the trade, right? Now that you've exited the trade, it starts to go back into what? That buy that you were in. And now you're upset. So this is emotional trading, y'all. We don't do that. We use our strategy. But the thing is, if you're realizing that, oh man, I've experienced the emotional reactions, drop that in the comments, because what we're going to do is we're going to work on working through those things and overcoming this trading trauma that we've all experienced, right? So that was number three, emotional reactions. Again, if any of these are resonating with you, drop them in the comments right now, okay? Number four is abandoning strategy. Traders who no longer trust their system, they may abandon it completely. And then they're going to jump from one type of strategy to another. So it's okay, well, candlestick patterns don't work, or it's not working for me. And I've been doing this for 2 months and it's not working for me. Well, let me go over here and learn about, this moving average, because they're telling me I need to cross over and then I need these things to do this and that. Let me go learn this. Well, then that doesn't work. And let's say that's been a month or so if you're doing it and that's not working for you. So now you're moving on to the RSI. And so on and so forth. You're just going from strategy to strategy. Okay? This inconsistency increases the likelihood of losses because they lack a structured plan. This is why I'm going to talk about something else here shortly to help you to get to the point where before you even go in your demo account, you can figure out if the strategy is worth you continuing to learn. Okay? So that was number 4, abandoning strategy. Number 5, this is the last one, y'all, overcompensating. Okay? So if any of these are resonating with you, drop them in the comments. Overcompensating. So in an attempt to recover past loss, some traders take bigger risks or chase pretty much revenge trade, hoping for a quick win. How many of you have gotten upset that you went into this trade? Let's say again, it's a buy. You're buying NAS 100, okay? You're buying NAS 100 and it's going up and then all of a sudden it pushes down. You're not prepared for that. You're like, what's going on, man? I thought I was about to hit my take profit point. So then you say, well, you know what? I'm already losing. Well, let me put in for this sale. So now you put in for the sale, but then NAS does what? Starts back buying. Y'all, we don't need to do that. We don't. These emotional trades often lead to further loss, and it reinforces the lack of trust in yourself and in your system. So those are the 5 things that I want you to just pay attention to. If you have experienced any of these, the hesitation, the overthinking, the emotional reactions, abandoning your strategy, or overcompensating, drop them in the chat. Drop them in the comments, okay? Because at the end of the day, without trust in yourself or your strategy, your trading strategy, you're more likely to make impulsive or overly cautious decisions. This, y'all, can prevent you as a trader from seizing good opportunities or managing risk effectively. Risk management is key. It is your bread and butter. This is your money maker when it comes to trading, when it comes to investing. Risk management is key. But here's the thing. You have to understand where you were to get to where you want to go. All right? So that's what we're doing here. All right? So if this makes sense so far, let me know. Okay? Give me a 1, y'all. As a matter of fact, give me a 1. I'm sorry. Yeah, my nose, my throat. We gonna get through this. I'm trying. All right. So give me a 1 in the chat or in the comments if you're watching the replay. Give me a 1 if this is making sense. Also, y'all, please don't forget to like the video. Give it a thumbs up on YouTube. Facebook, of course, you can give it a like, heart, whichever one you want to do. But YouTube, give it a thumbs up first. And then you can heart and comment and all that stuff. Also, don't forget to share this video with somebody that is definitely like, man, I know what you mean with trading trauma. Send it to them, okay? If it makes sense to them, they'll know what to do. All right? Now, we did that part. Let's get into practical tips for rebuilding your confidence. So if any of those 5 things I shared with you, if they resonate with you, if you're like, yep, 1 or 2 or 3 or all 5 of them resonate with you, we're going to talk about how we're going to rebuild our confidence. Number 1, this is something I teach religiously, and that is back testing, y'all. Back testing is when a trader tests their trading strategy using data, past data, to see how well it would have performed in the past. This helps traders build confidence in their strategy before using it with real money. You do this with TradingView or with your demo broker, your broker account, but in a demo account. You do this through those 2 mediums first, and then you get the data to say, yes, this trading strategy works. It definitely is working today. It worked in the past, and it's still working today. Now I could put the money in my broker account, and now I could use this strategy. But here's some examples, y'all, of back testing. So some of you know I use candlestick patterns to trade. specifically with Forex and crypto, right? Okay, cool. So because I use candlestick patterns, I want to look in the past with different things. I'm going to use it with currency pairs. I'm going to use the candlestick patterns with gold because I trade gold. I'm going to use the candlestick patterns with indices. Specifically, I trade NAS 100. So I'm going to use that with NAS 100, SPS 500, US 30, right? I'm going to use it with crypto because I trade Bitcoin and Ethereum. So I'm going to use that with that. And I'm going to go back. Y'all, you could go back 5-10 years if you want. I don't care. At a bare minimum, do at least 1 year, at least one previous year, and see how frequently that the candlestick patterns played out. Did they continue in profit or was there loss? Well, what's the frequency of the loss? What's the frequency of the profit? Okay. You can use this data to now tell you, okay, candlestick patterns do work really great with this, and this, or it works great with everything. And this is something I want to do. Okay. Now, here's another example. Let's say you only focus on support and resistance, and as far as a breakout. So you're a breakout trader. You wait for the breakout because the market does tend to, excuse me, the market does tend to range more than it trends. We all know that. If you didn't, when you back test, you'll see that. Okay. So now we're going to practice support and resistance. Okay, cool. So let's say as a trader, you design this strategy to buy when the price breaks above a key resistance level and sell when it breaks below a key support level. Got it. So now you're going to use the data. This is our back testing. You're going to use the data from, let's say you only want to pick one thing. Let's say you only want to pick gold. Okay, cool. So I'm going to use the data from gold, and I'm going to mark out past support and resistance levels, and then I'm going to apply that strategy. And now I'm going to analyze, this is my outcome. I'm going to analyze whether the breakouts lead to profit trends and whether the strategy would have avoided false breakouts. So where the price briefly breaks the level, but then reverses, okay? So we're using our strategy to help us to see, is this something I want to continue to use? Or if it's something that's nope, it's not showing me past data that it works, so I need to use something else. But you need a large amount of data to tell you, is it good or not? Not just, oh, I'm just going to do last month and then that's it. No, I know it may seem tedious, y'all, but at a bare minimum, y'all, use your strategy and test the past year. So this means marking it up, and then you're going to start doing this in your demo account. Okay, so if the past year, at a bare minimum, past year data says, yes, this strategy works, now you're going to move to doing this inside your demo account. So I'm going to give y'all one more example. Okay, this is the third example. Let's say you want to follow trends because you're a beginner and everything. That's really good. Okay, so let's say I'm going to use crypto as an example because there's a lot of money to be made in crypto. Okay, I would not suggest a beginner start with crypto, but that's just me. Anyway, so let's just say you're going to follow the trend when it comes to crypto. So we're going to use Bitcoin as an example. So let's say a trader wants to test a trend following strategy for Bitcoin where they buy the price when it is above a certain moving average. So let's say that moving average is your 50 EMA, your exponential moving average. So let's say we want to use this. We want to always have our EMA up. It's a 50 EMA on our chart. And anytime price is above, Bitcoin is above that 50 EMA, we're looking to buy. Anytime price goes below that, we're looking to sell. All right. So when we're back testing as a trader, we're going to run this strategy on historical data from Bitcoin. Now, again, you can use years, 10 years, I don't care. But at a bare minimum, y'all, you need to at least do 1 year. This is the bare minimum. Don't do less than a year. That's not enough data. I need you at least to do 1 year. But let's say you do it from 2015 to 2023. Okay, cool. So you did from 2015 to 2023 just to see how well it would have performed during both bull markets and bear markets. Okay, now here's your outcome. What you're going to see is how the strategy performed during Bitcoin's rise and in those periods of volatility. So now you can determine whether it will be effective in a future uptrend, if it will be effective in a future bear market downtrend, right? So at the end of the day, y'all, back testing just gives us as traders a sense of how reliable our strategies are under different market conditions. And it helps us to refine our approach before live trading. But again, y'all, this is the key. Back testing is done first by markups. Okay, that's your first step. You're not entering any trades into your demo account. First thing you're doing is marking it up, and you're going to do at a bare minimum 1 year of data. If you can do 5, that's awesome. Okay, but at a bare minimum 1 year, mark it up. So if you want to mark up 2023 for Bitcoin, 2023 for gold, 2023 for GBP USD, 2023 for US 30, I don't care. At a bare minimum, mark up the previous year. Okay? Collect that data. Now, if that data shows you with the strategy that you're going to use, if that data says, yes, this works 80 to 90% of the time, there's profit. Okay, cool. Now you take this and do this same strategy in your demo account. Y'all, I need you to do at least 150 trades to 200 with this strategy and this strategy alone. Don't do any other strategies you don't learn from somebody on YouTube or in their Discord or whatever. No, I need you to focus. 150 to 200 trades after you have marked up the previous year and the data showed you that 80 to 90% or 80 to 100%, whatever the number is for you, and you're comfortable with it, it needs to be high, y'all. I'm just gonna say that. But you know what I'm saying? If it works over 80% of the time, okay, yeah, you good. If the profit is there over 80% of the time, run it. All right. Now, once you have done the markup for the previous year to 5 years, okay, you've practiced it in your demo account, you've gotten the results, you've done 150 to 200 trades with just that one strategy alone, okay, and then you have your data. What does your data say from your demo account? Are you at an 80% win rate? Are you at an 85% win rate? Are you at a 90% win rate? Or are you at a 20% win rate? Well, why in the world was the strategy working when you marked it up and it's not doing that in your demo account? There's something there. Okay? You do this before you put money into your live broker account. The data needs to tell you you're good to go. If the data does not tell you you're good to go, do not use that strategy in your live broker account, y'all. I know we're in a society where things are like this. We want it fast. That's not going to help you. It's not. It's going to cause you to lose more money. We need to get in the habit, ladies and gentlemen, of letting the data tell us when to move, not our emotions. Definitely not hearsay. Okay? We need the data to tell us this is how you make money, but also this is how you minimize loss when trading. Okay? So how many of you have practiced back testing in the past or are actually still doing that today? Okay? Because I still do it to this day. How many of you have practiced back testing in the past or are doing it today? Let me know. Put it in the comments, especially for those of you watching the replay, because I'm curious to see. How many of you have practiced this in the past or are doing that today, back testing? All right. I'm telling y'all, it's a total game changer. It helps minimize so much when it comes to emotions and trading. It builds your confidence up. And on top of that, it saves you money. Okay. Because again, you're letting the data tell you what to do. All right. So now we have covered back testing. We covered back testing. We're gonna get into one more thing, y'all. before I get you to your homework for the week. And this is our last tip. We're gonna focus on micro trades. Okay, so we're gonna start with micro trades. This simply means using small amounts of money to make trades in order to rebuild your confidence in your trading skills without taking big risks. I'm gonna tell you, it does take a long time. However, small gains are better than no gains. So this is only after, y'all, this is only after you have back tested your strategy by marking it up and also in your demo account. Then you're going to start. I don't care what your account balance is, y'all. I don't care what your account balance is. I need you to start with a very small lot size. Okay? So here's what we're going to do. We're going to low risk, high learning. Low risk, high learning. What do you mean, Leona? Okay, why are we doing this? Well, number one, when you've lost trust in your trading, jumping back in with large trades can feel overwhelming and risky. How many of you have been scared to go up a lot size in forex trading? Let's say you started out with 0.01 and you're like, oh, I don't know. Can I do 0.02? You won 10 trades back to back. I'm pretty sure it's time. I'm pretty sure it's time to go to 0.02. You know what I'm saying? But when you focus on micro trades, it allows you to just practice without the fear of losing large amounts of money. So you got to start somewhere, right? So how do we do this? Instead of trading with big positions, you trade with a very small amount, like a fraction of your usual size. So instead of doing 3% of your account, you're doing 1% of your account. Okay? So I'm pretty sure at the beginning, hopefully, when you first started out, you were only, trading 1% of your account. If you weren't, then that clearly means that either you were taught wrong or you were being hard-headed. Because I wasn't taught to trade 1% of my account. I was actually taught out the gate to trade 3%. That's not wise for a beginner. It's not. So I would say if you were taught like I was to start trading larger percentages of your account balance, I would say you go down to 1%. If you want to do 0.5%, that's fine. But go down to at least 1%. Okay? This way, any loss is manageable. And you can focus on what? Execution. Okay? So low risk, high learning. Because we want to document our trades too. Remember, we're journaling. As we're doing all of this, we're journaling. We're journaling what we're putting in. We're journaling time of day. We're journaling what we're trading. We're journaling what type of strategy we're using. Okay, we're putting in our emotions, how we feeling before we enter the trade, how we're feeling while we're in the trade. We're also going to document how we feel after the trade has closed, either in profit or loss. Okay, so we're doing this low risk, high learning. Number two is we're going to focus on process, not profits. I know everybody say, oh, well, when you trade, you want to make money. You absolutely do. But here's the thing. When you've experienced trading trauma, you got to start over. You got to scratch all that stuff and start over. So why do we want to do this? When we're rebuilding our confidence, y'all, the goal is to develop consistency. We're developing consistency in our trading decisions rather than focusing on making big profits right away. I know you've been trading for 3 years and you're like, people are talking to you about, you've been trading for 3 years and you ain't making no money. Stop listening to them. I need you to focus. Okay? Do they trade? If the answer is no, you shouldn't be listening to them. I need you to focus. Okay? Micro trades is going to help you to concentrate on perfecting your strategy without the emotional burden of large sums being at stake. Okay? So how are we going to do this? We're going to focus on executing your trading plan correctly, such as following your entry and exit points. So like me, if you trade candlestick patterns, we know that we don't enter a trade unless that candlestick pattern is confirmed. That's number one. If that candlestick pattern is not confirmed, we're moving on to something else. We don't even look at it anymore as a potential entry. All right? That's number one. And then the other thing we want to do is make sure that we're using a stop loss. Y'all, I got it. There are some people out here saying, oh, you can do a minimum stop loss. I never tell anyone as a beginner, nor as a person who has experienced a lot of trading trauma to sit here and use a mental stop loss. That's not for you. Okay? Use a stop loss because that's going to give you a sense of security. It is. It's like a security blanket. Use it. And then also with your trading plan, you want to make sure that you're managing your risk. We talk about this thing on my lives on Sundays. We talk about risk to reward ratios all the time. Why? Because if you have a 1-to-1, which is I'm putting $50 in the market to get $50, if I lose the next trade, I'm back at zero or I'm in the negative. Whereas if I'm doing at a bare minimum 1-to-2, where if I'm putting $50 into the market, I want to gain 100. Now, if I lose a trade, the next trade, I'm still up. Okay? Because every time I'm going to the market, I'm looking at setups that have the potential to give me at least a risk to reward of 1-to-2 at a bare minimum. Anything greater than that, I'm grateful for. But at a bare minimum, I want to look for setups that have the potential to grant me a risk to reward of 1-to-2. Okay, 50 to gain 100. Okay, 100 to gain 200, 200 to gain 400. That makes sense? So us doing this small amount of money, y'all, is going to help you to practice that discipline while keeping your emotions in check. And I will even go so far as to say, if you have been trading for a while and you know how to utilize the trailing stop, I'm going to tell you something. That is something that helped me personally to really get my emotions like trading. I'm like, if it wins, great. If it lose, great. I mean, all I'm doing is following my strategy, and I always activate the trailing stop loss. If I don't activate the trailing stop loss, I'm fussing at myself like, girl, what were you doing? You know that's your thing. You know what I'm saying? But I'm not emotional to a point where it's like, oh, I'm not entering any trades. No, I'm just like, oh man, next time make sure you put your trailing stop loss on. Okay? So that's number 2. Number 2 was focus on process, not profits. Number 3, we have 2 more. Number 3 is we're going to build positive habits. Why do we want to build positive habits? Well, listen, after experiencing a loss of confidence, micro trades allow us to reinforce good habits, such as sticking to our strategy. Okay. And that's without the fear that often comes with larger positions. So we're going to make sure that if you're doing like I do, candlestick patterns, if you're doing those Japanese candlestick patterns, then guess what? You're not going to be saying, oh, I'm going to enter this trade even though it hasn't confirmed. No, you're like, I know that my back testing showed me every time it confirms, 90 to 95% of the time, or 90 to 100% of the time, it plays out. There's only a 5 to 10% time that it doesn't play out. So why would I not trade when there's a confirmation? When there's no confirmation, I'm not going to trade when there's no confirmation. I'm only trading when there's a confirmation to my pattern. Okay. So how do we build these positive habits? Well, with each successful micro trade, we start to slowly rebuild trust in our decision making and our trading strategy. Why? Because we've done the back testing with our markups for at least a bare minimum of a year. We've back tested in our demo, our practice account. So now we know that we're only acting according to our plan and our strategy. Okay. That was number 3, building positive habits. Last one, y'all, and then we're going to wrap. Okay. Number 4, we're going to gradually increase our trading size. So now over time, we're going to do this. Why? Once you consistently make good decisions with micro trades, you're going to feel more confident. Okay. And instead of staying at 0.01, you're going to be like, okay, I've been doing good. My emotions are in track. I'm only entering trades once my candlestick pattern, in my case, once my candlestick pattern has confirmed. I'm not waiting until 10, 20, 30 minutes after it's confirmed. Nope. I'm doing it as soon as it confirmed. Right? Excuse me. All of these things. So now you're going to feel more confident in increasing your trade size. Y'all, this gradual approach helps prevent emotional decisions driven by fear, anxiousness, anger, depression, desperation, whatever. Okay? These things are going to minimize these emotions, these, I would say, counterproductive emotions will start to minimize because you're consistent with doing what you know to do and you're seeing the results. So now you could go up a lot size. I'm not saying go from 0.01 to 0.10. No, go from 0.01 to 0.02. Okay. Then from 0.02 to 0.03. Make sense? Now, how are we going to gradually increase our trade size? Again, like I said, after we start achieving consistent success with micro trades, you can slowly increase your trade size in small increments as your confidence grows. No one should be able to tell you what to do, how to do it, when to do it. It's going to be up to you. Okay. So ultimately, y'all, starting with micro trades definitely helps us as traders to regain control over our emotions. It helps us to develop consistency and it gradually rebuilds our confidence in our trading skills without the pressure of big losses. All right. That was it. So hopefully this helped, y'all. I really do hope it helped. I know this went a little longer than I anticipated, than we anticipated, but especially on a Saturday. But hey, look, you got your information, okay? So now I'm going to give you a homework assignment and then we're going to wrap. So your homework assignment for this week, because part 3 is going to be next Friday, as long as everything's going good, God willing. I'm on here on Friday, which is going to be the 20th, September 20th. Okay. And that'll be at 7 p.m. Eastern, 6 p.m. Central, 4 p.m. Pacific. There we go. Okay. But your homework assignment for this week is micro trading. So over this week, this next week, I want you to take at least, at a bare minimum, 5 trades. Okay. I don't need you to go over it. I just need you to at least take 5 trades with very, very small capital. Okay. I need you to make sure your lot size is the lowest possible. 0.01 for my forex traders. For those of you that's doing options trading, if you're getting back on the saddle with options trading in the stock market, start with very, very, very low positions. Okay. And I want you to focus purely on execution, not the amount you stand to gain. Again, I need you to focus purely on execution and not the amount you stand to gain. And also, part of this homework assignment, I want you to document, okay, how you feel before, during, and after each of those 5 trades. Again, document how you feel before, during, and after each of those 5 trades. All right? That's your homework assignment. And hopefully when we come back on here next week, y'all can tell me how this is working for you. You've had 2 homework assignments with this series in the month of September. You're going to have 2 more, okay? But I really, really, really want you all to win. That's the reason why I'm doing this. So with that being said, we've talked about a lot today. We've covered, excuse me, sorry. But we've covered our first thing, which was talking about how that loss of trust in ourselves and our system can lead to poor decision making. So pretty much us touching on those trading trauma signs. Again, we talked about that. Then we talked about back testing. Okay, I gave you some examples of back testing with different strategies. And then on top of that, we talked about micro trades, which is part of your homework assignment. Okay, so if this has helped you, if you're like, oh my gosh, yes, this, listen, this is it. I needed this. Then do me a favor. YouTube, give this a thumbs up. Facebook, definitely you can give it a thumbs up or heart, whichever one. Comment some of your key takeaways from this live stream. Comment it, okay? Even if you're coming back and tuning into the replay, comment some of your key takeaways and then also share, because sharing is caring, right? And y'all don't forget, my birthday is coming up on Tuesday, but this entire month I'm having a birthday sale. There are a few things that I am offering to people at a very low price. We're talking about up to 80% off, okay, for the month of September. So that means tune in on Sunday. Tune in on Sunday because I'll be showing you all those things. Gosh, this wind. I'll be showing you all everything that is going to be made available to you as far as the trading programs that I have, those things that are on sale, and those things that are to come because my birthday is on Tuesday, so I'm going to announce something else on my birthday. But I need y'all to stay tuned, stay locked in. Hit that subscribe button if you have not done so yet on YouTube, and also hit that notification bell if you have not done that as well on YouTube. And that is all I have. Thank you all so very much for sharing your Saturday with me. I appreciate it. Oh man, I really appreciate y'all. Continue to be great. Go out here, do this work on yourself, improve, and then be patient with yourself in the process, y'all. That trading trauma took time to occur, so it's going to take time for you to overcome it. Okay, so be patient with yourself, give yourself a little grace, and then of course continue to practice and love on yourself. All right, so that's it. I'm going to leave you all with my favorite quote, and that is from the legend. His name is Arthur Ashe, and he said to start where you are, use what you have, and do what you can. Y'all have a wonderful Saturday.